So there's this whole problem we get with traders, not just beginner traders. Yeah, where you see someone who jump on their charts. So currently I'm on the 1 hour time frame. I don't know if you guys have experienced this, but then when I was like coming up, when I was still learning how to trade, I used to experience this a lot. When I will come to the chart with the whole intentions to trade. But then jumping on my charts now, I would be having this whole conflict in my mind where I'm like, am I even supposed to be on this time frame? Do you understand? Like, even as I'm on this time frame, what am I supposed to be looking at? Do you get? So you're like, okay, but then if I go to the 4 hour time frame, 1 hour was an uptrend. If I go to the 4 hour time frame now, it's another trend entirely. And then I'm like, which one should I actually follow? Do you understand? I don't know if anybody experienced this. If you experience this sort of stuff, can I see like in the comment section if anyone experienced this at all? Do get in the chat room? We can just drop a yes or if you experienced it. I don't know if I'm the only one that experienced it when I was coming up. But then that whole problem plagued me for a long time and it was very, very frustrating. Do you understand? You get to see where you jump on your chart, you're coming to the chart, you wake up in the morning, you're all gingered, you're coming to come and make money. But then you jump on your chart and then you're paralyzed because you don't know which direction to follow. Why? Because you don't even know what time frame you're supposed to be using. And that whole stuff causes that whole pain of not being able to take trades. I think it's much more painful than taking losses in the market. I don't know if it's for only me, but you being in the market and then watching opportunities pass, I feel it's much more painful than actually taking losses. Do you understand? So this whole question of time frames, all these things are things that top-down analysis intend to actually solve. Do you understand? So what is top-down analysis that is coming to solve all these problems? So top-down analysis basically is just that whole, one sec. Shit. I think my network is bad. Yeah, network is bad. So top-down analysis basically tries to solve this whole problem of what time frames to use. Sorry. What time frames to use. And then what to use them for. So we're first of all trying to look at, okay, as a trader, what time frames am I supposed to be using? Do you understand? And then that's, as I'm on this 4 hour time frame now, it will answer that whole question of a 4 hour time frame, is it a time frame for me to use? Do you understand? And if yes, what am I supposed to be using this 4 hour time frame for? Because if you see this 4 hour time frame now, we have an uptrend. Do you understand? You can see that we're having series of higher highs, higher low, higher highs, higher low, higher highs, higher low. But then if we go to like the 1 hour time frame, let's go to the 1 hour time frame and then you guys will see. Oh shit. So now on the 1 hour time frame, you can see that to a certain level we're having an uptrend, but then at this top here, we've created more or less like a double top. So price has created like a higher high, higher low, failure to create another higher high, and then we're broken below. Now, those of you that are familiar with chart patterns, you know that a double top is more or less a reversal pattern. That's price has started reversing towards a downtrend. Do you understand? So 1 hour now is more or less shifting to the downtrend, but then 4 hours in an uptrend. So the question now becomes, what am I supposed to do? Do you understand? Am I even supposed to be using this 1 hour time frame? Should I neglect it? If I go to like the daily time frame or even the monthly time frame, you still see a different thing entirely. So these are the problems we're trying to solve with top-down analysis. Do you understand? So you guys can pay attention pay attention very well. At the end of this session, it is expected that we all here now should have some sort of clarity regarding this whole thing of time frames. And all those questions regarding time frames now should be, anytime we ask ourselves, we should have the answers or should have an idea of what the answers are. And after this session, I'm going to be sending you guys a slide I did regarding this top-down analysis for free. So I'll send it on the 123 group. If you're not in the group, I'm going to drop the, one sec, let me see if I can get the link and then drop it for you guys. So you join it. I'm going to drop the free slide there. It contains everything regarding, I think some of my students have this. Most of my students from HobbyForex, I think most of you guys have this. And then those that have done one-on-one classes for, I think most of you guys have this. So it's like, let me drop the link in the chat section. So I can see a lot of people are saying yes, a lot of people are actually having this issue. So we're actually going to solve all these things today. So we're going to start with that whole first problem of what time frames to use. Now, when it comes to what time frames to use, yeah, the time frame you use as a trader depends on the kind of trader you are. And I think I spoke about this in a reel I posted on Insta a while ago. Yeah, when it comes to what time frames to use, you're more or less looking at what type of trader you are, first of all. Do you understand? So most of you that have stayed in the market for a while and then have watched YouTube videos, you hear a lot of traders. You hear people saying, oh, I am intraday, I am daily, I am positional, I am swing trader, I am scalper. Do you understand? So all these types of traders here, we can categorize them into 4 categories or into 4 groups. Do you understand? So first we have positional traders. Positional traders. We have swing traders. Oh, sorry. We have swing traders. We have day traders. And then we have scalpers. Scalpers. So we're going to be looking at them one by one. One sec. We're going to be looking at them one by one. So when it comes to positional traders are more or less long-term traders. Do you understand? These are guys that hold trades for months, for years, and then they actually trade in with big equity. Do you understand? Imagine you're holding a trade for months and then you're just looking to make $100. You see that the mathematics is not going to work. Do you understand? These are people that are looking to hold a trade for 4 months and then make $400,000 or even $1 million. Do you understand? So these guys have big equity and then they're trading long term. Now we have swing traders. Swing traders are more or less mid to long term traders. Do you understand? These guys basically hold trade for days and into weeks. But I think once you start holding your trades into months, 2 months, then you're a positional trader. Do you understand? So swing traders hold trades for days, for weeks, and all. And these ones, they don't really have money like positional traders, but then they too, they are looking to make big money. You're looking at people that are holding trades for weeks and then looking at price tapping somewhere and then looking to catch 100 pips, 200 pips. Do you understand? Now, we have day traders. Day traders now are what most of us are. Someone like me, I'm a day trader. Do you understand? I'm looking to hold the trade just within, let's say, a day, highest 2 days. Do you understand? Once I start exceeding that whole threshold of 2 days, 3 days, then I'm a swing trader. Do you understand? And the nature of day trading, yeah, no matter how I enter a trade, except if there's no volatility in the market, but then price is supposed to hit my stop loss or take profit within a day or two. Do you understand? Except price just continues ranging at one point. Now, the last one we have as scalpers. Now, this is the one most beginner traders want to be. Yeah, you're looking to just jump on a trade and then exit immediately, like short-term, very short-term traders. You're looking to jump, exit, and then this one's actually trade on the lower time frames. Do you get? Now, with the nature of scalping, yeah, most times it's advisable that beginner traders should not do scalping. You see the irony, yeah? Beginner traders want to do scalping, but then it's not advisable for beginner traders to do scalping. Why do I say so? It's because to a certain level, the lower time frame where scalpers actually trade, there are a lot of noises there. And if you don't know what you're looking for, most times you get to trade rubbish. Do you understand? So let's say we jump to the 5 minutes time frame. If we jump to the 5 minutes time frame, if you see the structure there, it's fucking crazy. If you jump to the 1 hour time frame, it's very crazy. Do you understand? So you get to see setups happen over and over and over and over and over and over. And then most of these setups, since you're having a lot of setups, some of these setups, I wouldn't say most, some of these setups are losses. So you get to see 20 setups a day, and then let's say 7 are losses. Now, how many of us here can actually see 7 losses and then still go back into the market to take a trade? Do you understand? I'm just guessing a few of us. Do you get? Even I, that to a certain level, I have had that whole resilience in the market. If I see 7 losses to a certain level, it's going to bring down my morale. Do you understand? So if you have not gotten that whole idea of how price works, and then how price movement is, and then what your strategy is, and then what you're supposed to be looking out for, please just stick to the higher time frames for now. Do you understand? There is no need doing scalping. Once you understand how price behaves and all, you can jump and then start doing scalping. Then it's actually okay. Then you've mastered things like risk management and all. Are you guys following me all through? Is anybody lost?
Yes.
Okay,
Yes,
good.
we are so.
So here's the thing. We started looking at these traders, not just for looking at these traders' sake. We're looking at these traders so we could actually decipher what time frames to use. Do you understand? Now, when it comes to what time frames to use, yeah, I'm going to start with scalpers. So for scalpers, the time frames recommended are the 1 hour time frame. Sorry. The 1 hour time frame. The 15 minutes time frame. The 15 minutes time frame. And then the 5 minutes or the 1 minute time frame. Then for day traders, you have the 4 hour time frame. Sorry. The 4 hour time frame. The 1 hour time frame. And then we have the 15 minutes or 5 minutes time frame. Or 5 minutes time frame. For swing traders, you have the daily time frame. You have the 4 hour time frame. Then you have the 1 hour time frame. Then for positional traders, sorry. For positional traders, you have the weekly time frame, the daily time frame, and then the 4 hour time frame. Do you understand? So now these are the time frames recommended. So first of all, we've figured out, we said, okay, when it comes to what time frames to use, it depends on the type of trader you are. We've looked at the type of traders we have, and then what time frames are recommended to use. Do you understand? Now, here's the thing. I know some of us here will be wondering, okay, how do I know what type of trader I am? Do you understand? As I am like this now, should I do day trading? Or is swing trading better for me? Do you understand? Or should I do positional trading? But then this is one thing I used to tell my students. If you don't have up to like maybe $2 million in your trading account, don't worry about positional trading. Just come back to swing trading. Do you understand? So first of all, we're going to be looking at certain things that actually like should influence your decision on what type of trader you should be. Hope you guys have been following so far.
Yes. Yeah.
So now, what are these things we should actually like look out for when deciding what type of trader we should be? First, we have time spent on charts. We have lifestyle. We have risk appetite. So now, what does this mean? When it comes to time spent on charts, I know most of us here, we all have our lives. Do you understand? So personally, I'm going to speak about myself. I don't know about others, but personally, most of you know that I actually teach like at the trading floor, and most days I'm doing classes, or some days I'm doing classes, and then I still have like one-on-one students that I actually like mentor. So you'd see that in a day, let's say I have 12 hours to work. 6 of those 12 hours are actually dedicated to my students. And then I have just another 6 hours to more or less spend on my charts. Do you get that sort of like splitting of time now would not really allow me to spend a lot of time on the charts the way I would want to spend time on my charts. If you'd let me say, I'll spend like my whole life just looking at the charts. Do you understand? But then I can't. So that being said, I cannot drop to like the lower time frames on the 5 minutes or the one minute time frame. Yeah, opportunities are coming almost every every like 30 minutes to say, oh, I want to like do scalping. If you look at the mathematics, I don't think it's going to work. Do you understand? You might see that whole time, I'm spending like teaching my students and then mentoring people, trades are more or less moving. Price is moving. Trades are happening. Winning trades are happening. Losing trades are happening. You might see that all the good setups for me for that day will happen when I'm doing like 2-3 classes. And then by the time I'm coming to my charts now, it's just losses. And then I'm wondering why. Or I'm feeling like maybe village people have started hunting. Do you understand? So evaluating this thing now, if you spend less time or if you have less time to spend on your charts, please leave scalping. To a certain level, you could do day trading if you have small space. But then if you're working like in a place like a bank, where maybe it's only at night you come back, you have time, or maybe once in a while you just sneak and then look at your charts, you can do swing trading. That would suit you better. Do you understand? But then if you don't have anything to do, do you understand? You're like me when I was not teaching, then I used to sit at home. I don't have anything to do. I used to just like spend time on my chats. You can confidently do day trading. Once it gets better, if you understand price movement very well, then you can do scalping. Do you understand? This is a factor. It's a very, very important factor that you have to consider. If not, you'd see that you're spending a lot of time off the charts, and then you're coming back to when there are no setups or when markets are closed. You get. Now, the second one is lifestyle. When it comes to lifestyle now, I spoke about this extensively in another video where I said that there are certain people that are not patient. There are certain people that are patient. And it's not our fault. It's just how life is. Do you understand? It's just how some of us are built. Now, me with an impatient spirit, you want me to go and do swing trading, even if I have the money to do positional trading. Honestly, I don't think I'll be able to rest. Do you understand? Coming back to check every now and then, it's going to be tough. But then if you have that whole, how will I put it? If you're lucky to be patient, then fine. You can put your setups, wait for weeks, wait for months for it to actually actualize. Do you understand? That one is actually easy. So you can do swing trading. But then if you're not, please, if you are not able to learn, fine. If you're able to learn, fine. If you're not able to learn, then please just stick to things like day trading and then scalp. Do you understand? Now, the last one is risk appetite. This one is actually very, very important. If you look at, in short, this one, I don't know if most of you have observed this, but then someone like me have observed this a lot, where I get to meet in a month. Most times I get to train up to like 20 people, 30 people. Do you understand? In a batch, I get to see where some students, once they get in, they are risking money for trades. And then some people will just stay and be like, oh, see, I finished learning this thing before I go deposit $10. Do you understand? You see now that across one class, people have different risk appetites. Do you understand? So if you're somebody that you just want to be risking money, big, you have like 2K accounts, you want to risk 1,000 for one trade, I want to use it and flip it to $10,000. Please don't go and try that thing on the lower time frame. Where you see uptrend, next thing the thing has changed to a downtrend. Do you understand? If you want to do something like that, then you can do day trading or swing trading. Because there, it's very, very hard for price to like disrespect higher time frame buyers. And then most times higher time frames actually like, I don't want to say determine, but more or less lead the rest of the time frames. Do you understand? Then higher time frame zones are actually still stronger. I don't know if you guys are getting me. So please, if you have a high risk appetite, just lock up and then do higher time frames. Leave lower time frames for people that don't have a problem risking $5 inside $10,000. That one, if they like, they can take 100 losses. It will not affect their accounts. Are you guys getting the idea of what I'm like saying? Hope I'm not speaking to myself.
No, we are still here.
Okay, good. So
yeah, we're getting you.
So that's
Yeah.
these are more or less things you have to like factor in before choosing the type of trader you should be. Now, why are we choosing the type of trader to be? It's so that you know what time frames to use. You cannot use all time frames. Do you understand? Now, we've answered one question. We started with saying the two questions we have are, first of all, what time frames to use. Secondly, what to use those time frames for. Do you understand? We've answered the question of what time frames to use. Now, when it comes to what to use them for, every trader needs to have one, a directional time frame. And then a mid time frame. a mid time frame, and then an entry time frame. Whatever trader you are, you need to have these three time frames: directional, mid, and then entry time frame. Now, what are you using these three time frames for? First, your directional time frame is more or less the time frame you're looking to get the bias of the market from, and it's mostly your highest time frame or your biggest time frame. Do you understand? So this direction gives you an idea of where the market is headed to, bullish or bearish, and then like the major zones, you could say something, or major areas of interest. Now, when it comes to your mid time frame now, you're more or less trying to get zones or area of interest where you could follow this directional time frame. Do you understand? Because imagine your directional time frame, your highest time frame is the weekly time frame. If you say you identify a zone on the weekly time frame and then wait for price to tap there, it could take a lot of days or even a lot of weeks. Because one candlestick on the weekly time frame is 1 week. Do you understand? But then if you drop to your mid time frame, which is a lower time frame, you could catch trades in between before price gets to that level. And then once price gets to that level and then starts reversing, you can start catching trades in that direction also. Do you understand? That's the use of your mid time frame. Then your entry time frame is more or less where once price taps your zone on the mid time frame, you're dropping to your entry time frame to more or less get entry confirmations. Do you understand? Now, if you don't know entry confirmations, we would host another session and then talk about entry confirmations. But then my students that have basically learned entry confirmations, that will have candlestick and then market structure confirmations. Do you understand? All these ones are more or less additional confidences you're looking for before jumping on your trades. Are you guys with me?
Yes, sir. Yeah,
good. So now we're going to use an example of a day trader. I'm always using day trader because I'm a day trader. Yeah, so it's something I do every day. So we're going to use an example of a day trader and then position how or what time frames we should use and then what to use them for. So for our directional time frame, if you look at the day trader, the time frames to use are, first of all, the 4-hour time frame, the 1-hour time frame, the 15 minutes or 5 minutes time frame. Do you understand? So in this case, your 4-hour time frame is going to be your directional time frame. Do you understand? What are you looking for on this directional time frame? The main trend of the market. So if I pick any currency pair now, as a day trader, if I'm even on the 5 minutes time frame, I know that I'm supposed to use the 5 minutes time frame, but then that's not the first time frame I'm supposed to look at. I'm supposed to go to that's my directional time frame, which is the 4-hour time frame. Now, what am I looking for on that 4-hour time frame? Whether the market is bullish or bearish. Now, if I finish that, I could decide to highlight, those 4-hour zones and be like, whatever price taps here, there's a potential that price could reverse, and then watch out for it on the lower time frame. Now, on my mid time frame now, after getting the direction, I'm going to my mid time frame to go and see, okay, what zones could I get? Do you understand? To basically continue this trend. Because on that 4-hour time frame now, if I decide to wait, price might take 1 to 3 days before tapping there. And then that reaction to my take profit might take another 1 to 3, 4 days, which more or less wipes away the whole aim of being a day trader. Me being a day trader is so that I don't hold the trade more than a day. Do you understand? So on this my mid time frame now, I'm looking for minor zones or lower time frame zones where I can more or less get trade opportunities from, or zones where I can get trade opportunities from. Then once price taps this zone, let's say I have something like this on my mid time frame, I see a support onto resistance here. ICT people will call it, no, ICT people will not call this one breaker, except it's coming out from a reversal. So I see a support onto resistance here, and then I'm looking at price going back to go and tap it. Now, once price taps it on this 1-hour time frame, mind this, up until price taps it on the 1-hour time frame, before I drop to my 5 minutes, my 15 minutes or 5 minutes time frame. Do you understand why are there 2 time frames for confirmation? It's because 15 minutes is good for looking for candlestick confirmations. But then 5 minutes is good for looking for market structure confirmation. So you're looking for reversals on those lower time frames. Confirmations are mostly reversals. So you're looking for reversal signals on those lower time frames. So I said 15 minutes for candlestick confirmation, 5 minutes for market structure. If you don't understand, no worries. I'll host a session some other day and then we'll look at these 2 confirmations. Do you guys understand?
Yes.
Okay.
Yes.
So, yes, you understand. I get you.